Everyone. This is Brad Matheny. Today's the 3rd of February. Boy, what a day. Let me spread this chart out. This is a 4-hour chart of the SPY. We are moving into this contracted downward period, and my cycle patterns are suggesting a rally, counter trend rally over the next couple of days, leading into a Friday carryover in carryover mode. And I'm getting some questions regarding how to interpret it. And what I'm really paying attention to right now is, and I'll just draw it for you, is these lower highs and these lower lows right now. I think that this is an indication that the markets are breaking down support very aggressively. You can see we move down, then we reject back up. So it looks to me like we're, closing this gap right here. I'll mark this in just call this a kind of a bluish color. So we're closing that gap and we break down, and then we get this move down here, which essentially closes this gap right across here and recovers. And now I think the next move is that we are going to be trying to close this lower gap down here by about the end of this week. And so, this is a 4-hour chart. So the entire week is broken down into 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So given where we're at, and given that we continue to break down and then pause and stall and then break down, I'm kind of looking for the same thing. Now, where we're at, we've created this gap up here in the SPY. We've technically, almost filled it. We did come up and fill this gap. So for tomorrow, if I were to understand what the rally is going to do and try to lead you in a direction that I think is going to be helpful, is that we may end up seeing a rotation up to fill the gap, which is really only, here's the gap, mark that in a red color, which is really only, from where we're at here near the close, up only about 0.5%, up higher to fill this gap. And so we roll up, we potentially fill the gap. And again, this is 1 hour. We roll downward. Then I think we're going to move into that sideways type of consolidation, drifting downward into that counter trend mode. And I think we're going to be targeting this 580, 585 area. So I know I draw a lot of stuff on my, let me draw this in yellow, I guess, and draw this in yellow. So I think, again, what my gut is telling me and what my patterns are telling me is that we're going to have, that moderate consolidation above this low level here. So we really have some support kind of in this area that's going to carry out through Thursday. And, that's going to be fairly important to see how the markets react to these support levels. We have, again, this support gapping level here. And this one has already been filled. I think we're going to run into this resistance right over here around 601. And then we're going to roll into, come Wednesday and Thursday, into this sideways channel. Now, how does this kind of break down? Well, we've talked about it before. I'll do it again for you. So we're looking at this move here from roughly the low on January 13th, and we come off of that low, come up to these most recent rejection highs. This is the SPY again, and we're looking at that 382 to 618 area, which is basically right here. And so you can see, folks, that we're in this, let me make sure I got the right thing. We're in this and have been dancing around this 382 to 618 congestion area. And now if you take a look at these rotations and you do the same thing, you can come up here and you can play off of this high, rejection low, rejection high. That's what I like to look at least. And so now we have the 382 and 618 area here. I'll make this a lighter red color. And then if we take a look at it again, from this move up to here, it's almost the exact same level. And then what I'll do is I'll take and move it down to this rejection low. And that puts us at a 382 to 618 level here. So understand that we are moving into resistance up in this area and support down in this blue-green area based on Fibonacci levels. And what's telling me is that we're probably going to run into resistance right over here around 601, and that we will probably roll through a cycling mode, potentially setting up a lower low eventually back out over here. I've drawn this possibly a bit incorrect, so I will try again. Lower low, lower low, lower low. And again, we have the lower high, lower high, lower high, moving down in that channel. You see where I'm at with this, guys? Really looking for that breakdown to happen somewhere around late Tuesday, Wednesday, which would move us into this pattern right here. Late Tuesday into that last little rally phase, moving into a counter trend rally phase. And so what I think you're going to have is a bit of a rotation, then a rolling back down, holding up above these lows. So it's going to be trying to hold above these levels. But really, when you get right down to it, this gap level, which is the lower range right here, becomes very critical support, 590, 589. So again, right here, 589 becomes very critical support. And we have this continued downward trending. And I think what's going to happen is, we're moving into that breakdown pattern right here on the 10th and the 11th, right? 9th, 7th, 8th, 9th, 10th, and 11th, basically. The pattern itself is on the 9th, which is a Sunday. So I think we're going to be looking at a deep V pattern, potentially down here in this 575, 577 area, potentially even down lower. But in order for us to break down into that deep V pattern, we're more than likely going to weaken through the end of this week, maybe down into this lower channel here, which, remember, when we come all the way back and you take a look at that October, I'm going to get really deep here. When you look back at that Kamala crush back here in August, and you really start to take a look at the data, okay, so here we have the absolute data from the Kamala crush rejection area about 4 months before the election up to here. And where does that put our 382 to 618 area? Right over in this area. Interestingly enough, right over where I drew my data, you can see it right here. The 382 to 618 level aligns perfectly with my broadening deeper lows that are setting up, and they happen to align very cleanly with this lower channel, while at the same point in time we're likely going to be setting up a weaker channel coming down across this area, a broadening type of a flag formation playing out. So Go to 2 hours so I can condense this a little bit. And there you go. There's the layout of why I think we're breaking down slightly. So at this point, what I would urge you to do is try not to get too overly long the market. Yes, tomorrow, Tuesday, and Wednesday, the 4th and the 5th, likely will give you some opportunity to the upside, but I think you're going to be seeing primary sectors weakening. We're already weakening into the close, it looks like. Let me come take a look here, 3-minute, spread this out. Yeah, you see, we're already weakening a bit into the close here. And I think that's because we're going to probably make the second attempt to try to fill this mode right here, this gap tomorrow. Now, we may end up back in the 602, 603 area tomorrow, maybe even a little higher, 604. But I think that's going to be a one-day move, and I think it's going to roll over, just like I've shown you right here in yellow. Start to weaken, maybe try to bounce up a little bit along the way. And then once we get into Thursday, Friday, I think we're really going to get a breakdown. I think it's really going to start to move down into this 580 area, maybe 575 area. And then we're going to look for that deep V. And I really think that 570, maybe even lower on some crazy event. Now, remember, we've been getting very big gaps over the weekends. So, could be setting up the deep V pattern back over here as a big gap to the downside. I just don't see how, given the news, given what we're hearing, given the tariffs, given what's going on, with Trump's executive orders, it just seems to me that we are going to be moving into this downward channel, looking for support. And I'm going to tell you, really, the support's coming. You're going to be amazed at how minor this pullback actually seems. Remember, we're talking about, it looks like, oh my God, this is a horrible pullback. Really? You're talking, 7-8% maybe. That's a pretty normal pullback in the SPY, guys. If you deal on anything moderate term, daily chart, couple hour chart, a 5.5 to 7.5% pullback is pretty common. It happens probably, I'm going to guess on average somewhere between 5 and 12 times a year on average. So understand, this is nothing out of the ordinary. In fact, you take a look back over here at the Kamala crush, 10 minutes, I got to go back to 2 hours. You come back over here and you take a look at the Kamala crush back here in August. So back over here, look, we had a crush down here, 10%. We had a crush down here, 5.5%. We had a crush over here, the Kamala crush, 8.5, almost 9%. And now we're talking about a crush over here that maybe is going to get down to 9, maybe 11%, 11.5%. And we think, oh, it's the end of the world. It's just like this. It's exactly just like this, just like this, just like this. It's not the end of the world. But what's going to happen is we're going to move into some growth phase. I already know where it is. I've kind of hinted about it, but it's going to end up being out in this area. We're going to get into some growth phase, and it's going to start to rally. Going to really start to move upward way out here. You got to be patient for it. You got to let the market settle, and you got to realize that this is just what happens. We're going to move into that growth phase eventually, but we're going to have to play out the next 3, 4, 5 months before we get there. So where we're at with the rally phase for the next couple of days is just like I told you. We're going to, in my opinion, move into a little bit of support tomorrow, probably staying between 594, well, let's call it 595, 596, and 603, 604, leading up to fill this gap. And then I think we're going to roll over into consolidation, really stall out on Wednesday. I think that's going to be a pretty flat type of a rally day. I mean, if we end up back up near these highs again, I'll be surprised, but it could happen. And then I think we're going to aggressively move down into a deep V pattern. My expectation for the deep V pattern is really in this 580 to 586, 587 area. I think that's almost a guarantee that we're going to try to break down below, into this gapping area and below this purple line support, this 589 area. I really do believe we're looking at a target area, minimum target area, kind of into this area for the breakdown low, the deep V low. Now, I've drawn it out over here because there's a chance we could get a fairly deep breakdown low. And again, simply put, take a look at this, guys. We have this, we have these channels coming all the way down. So this middle channel that I've drawn right across here puts us right in that 580, that deeper low. Okay, so that's our middle low. This is our deeper low. And it's very simple. We're running right across these channels. We're essentially trading right across these middle levels. Visually, that looks better to me. And again, you can see that we're kind of just trading right in this zone. We've established these lows, coming down to maybe hit these lows. We've established these highs, which means we could get rallies back up into these high levels. And again, that would put us a rally right here about 604, 604 and a half. Then it looks like we're going to break down into this 580, 584, maybe down into this deep low. And then we're going to struggle to get out of this mode and then eventually maybe try to pull back up into the 580, 590 area. But it's very clear to me that, this pattern, this breakdown into this weekend, leading to this evening star island gap defender base rally this is a gap defender in counter trend mode, base rally, Harami inside crush pattern, moving towards our top resistance pattern over here in counter trend mode, which should be a bottom then, which is perfect because that's the date that I'm picking for the second bottom. I think we're going to roll downward, and I think we're going to roll sideways between call it the 12th and the 20th or so of February. That's only about 6-7 days. And then we're going to roll down into a deeper low back over here. So we'll see how it plays out. I mean, I'd love to be able to come to you guys in about 2 weeks and go, just like I predicted, which is going to be probably my new catchphrase, especially after the last couple of weeks. But again, I wouldn't get too excited about a rally here. I just don't see much upside here. And if we got above 604, I mean, at this point with this move, if we got above 604 into 605, 606, I'd be looking to short this, to load up on some puts and wait till next week. I think you've got a really good opportunity that we're going to see come over and do it again for you. But if we got up into this area, I think you got a really good opportunity for a 3.5% breakdown move into this 585, 584, 582 area. And I think that's almost a given right now. Okay, so there's your update. Pay attention to this chart. We've got the breakdown mode already. We've broken down below this channel. This channel really is more here. Let me try to draw it for you. So even off of this low, you can follow it pretty much up like this. And I could include that. I can include this more. It's more parallel. And that would be our channel for the excess phase peak pattern that we've already broken and moved to the downside. So we've broken both of these channels. We've moved to the downside. You do understand that in theory, because we've broken this pink channel and this blue channel, where really we should be moving down below the flag low. The flag low was back over here. This is our flag low. I'll mark that as a super dark green. So we should be attempting to roll downward below 594.50. In fact, I'll mark that right here as the next move. We literally should be breaking downward. 594.50 is going to be the next target low. We have to get below that level and stay below that level, which is going to be congestion for the blue trigger, probably down around this 580, 585 area, congesting and then consolidating. This big move, the pink move, is likely going to be a bigger breakdown into this consolidation zone. And then maybe a bigger breakdown later. We'll see. But it's playing out very cleanly right now. It's just like I said, you maybe have 24 to 48 hours of a little bit of a bullish move, and then I think we're shifting back into breakdown mode, bearish trending. So be aware, guys. It's playing out very cleanly, in my opinion. But these little rally bars are in a counter trend or a downward trending mode. I don't expect to see too much of a rally over the next 48 hours. Yeah, maybe 2 or 3 points. Maybe back up into the 604, 605 area, maybe. But I don't think we're going to get much higher than that. So anyway, there you go. Go get some. Hope you had a good day today. I certainly did. And anyway, a lot of my followers are writing me, telling me how great they did today, which is outstanding. Okay, really outstanding. Love seeing you guys make money just like I do. All right, guys, talk to you later.